Hello dear students. Let us understand about cost of capital in this session. Cost of capital. So capital is nothing but the investment. For a business to raise funds, obviously that we need to procure those funds from different sources. It may be owners' funds or it may be outsiders' funds. Any of the funds which you are accumulating from different sources, for all the funds, it has some cost. It requires some cost. That is, you are in a position to repay for the investment which you are accumulating from different sources with some additional amount. See here. So cost of capital is the cost of acquiring the funds. Acquiring the funds is accumulating the funds from different sources. Different sources in the sense it may be shares, it may be debentures, it may be loans, or it may be retained earnings. So there are many different sources like this. From all the different sources, you can able to collect the funds which you are required to run the business. For the funds, obviously you have to give some return. You have to spend some cost, and that is actually called as cost of capital. Yes, if it is shares, cost of capital here is dividend. If it is debentures, if you are taking source as debentures, there your cost of capital will be your interest. So that is what the cost of capital. See the next line. So on raising funds from the different sources, various sources, obviously the company has to pay some additional amount. That additional, it may be debentures, it may be dividends, it may be interest, whatever. Apart from your principal amount, whatever you are paying additionally is entirely called as cost. Okay, so this additional cost we say as cost of capital. And definition for this cost of capital, it is the minimum rate of return that the company must earn on its investment to fulfill the expectations of the investors. Investors here is shareholders is your investors, debenture holders, retained earnings, even your banks. All these things are your investors. We can consider them as investors. Okay. So at least some minimum rate of return that we need to earn to fulfill them. Okay. So say for example, your cost of the minimum rate of return that you are in a position to repay to your investors, let us assume that as 10%. At least than 10% that you should earn from your business so that you can able to repay them. That is what the minimum rate of return. Okay. See here. So these are all the different other names of cost of capital. We can say this as break even or minimum, cutoff, target, hurdle, or else even standard rate. So what is this break even rate? So break even. Suppose you are in a position to repay to your investors around 12%. So at least you should earn 12% from your business for that specific period of time so that you can able to repay that 12% to your investors. That is what break even. Right? So minimum, same meaning. At least minimum of 12% that you should earn from your business. It is also called as cutoff rate of 12%. Here let us assume as 12%, at least 12% you should get. Even we can also say that as target rate of 12%, or else hurdle rate of 12%. If it goes less than that 12%, 11 or 10%, you are in a position, see, imagine that you are in a very difficult situation to repay to your investors. You not even earned 12%. to repay them. So that is what the hurdle rate is 12%. Standard is fixed of 12%. Right? So these are all the different other names of cost of capital. Thank you.